Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your financial market update for the weekend edition of Friday. And this is the 19th of January 2018. Now remember, on the weekend edition we do things a little different. We start off, if you will, with the monthly chart, and then I go into all weekly charts. I've been able to get some new Bitcoin data, so I've got a lot more information for you there as well. I'm working on webinars, and I know that I'm thinking it'll either be this coming week or the week after. I've already got the software. Now we're getting every other part of it installed behind the scenes for you. So be it this coming week or the week right after it, you will see my first webinar. I intend on having one in January, and from there we'll start making them a much more regular event. In the webinars, you're going to be invited in, and they typically will be held around 12:30, 1 o'clock in the afternoon Central Time. That'll be about, figure what, 1 o'clock, about 2 o'clock Eastern Time to 1:30. If you come in, terrific. If you don't, you want to see a recording of it, we'll make that available, but there'll be a fee to do that. The invite into it, however, especially if you're a subscriber to my research, that's all included right with it. For those of you that aren't, it'll be a good chance for you to learn what we're all about, and we'll make arrangements for you. So, got a lot going on, as you can imagine. Today, we're still waiting to see if a deal is made in the Senate to fund the government. Behind the scenes, they're racing. I don't know what's going to get done or not get done. The marketplace is anticipating and built in that a deal's done. It'll be an extension. It won't be the whole budget deal, obviously. Who's giving what and where the give and take is, nobody really knows. But you rallied to new highs in the last hour and a half of the day after the president concluded a meeting at the White House. We'll see just what comes out of that. We saw that the metal markets backed off. They were up, but they backed off a little bit going into the close. The dollar and all these other currencies had closed before the late surge in the stock indices, so this wasn't too far off from where they were, but it's definitely off. And there's been pressure on the all of the energy complex, as you can see. The rig count came in down 5 for the week. When you look at it, I think it was really about 3 down in everything in terms of the oil. But if you look at Canada's rig counts, they're exploding to the upside. Interesting what's going on. A lot of us thought we'd see, after 10 last week, a small amount added this week. I'm surprised that they took back half of those. But the market didn't seem to care. It didn't break after the news, which comes out just after noon. In the monthly chart of the S&P, what can I say? I can't give you anything except to say the market just continues to accelerate. The same thing on a weekly chart of closes, just a continued power to it. There's no way to do an analysis that makes any sense. It's just up and away. The market doesn't even break through previous lows. Look at how this has gone on these swing lines. Higher and low, higher and low, higher and low, higher and low. It's nonstop. So when you get something like that on a long-term chart, there's not much that you can say about it. You're well over the 18-week moving average of closes, which is well over now the last break low. So on a pullback, it doesn't even mean on a formation like this that you necessarily break the pattern of higher lows and higher highs. When you take a look at the Bollinger Band, a sign of strength in a market is when it sits on a Bollinger Band and just keeps running with it. And this market has had that sign of strength, if you really consider it. Not here. It began right here in October of last year going into November. And one of you listened, Art was the gentleman's name, and corrected me. I made a statement, I guess, the other day about when the president won the election. I wasn't trying to be up. He won in November of 2016, and through 2017 I had said that the stock market had gained from that point almost 40% in a number of the indices. I'll stand behind that part. I was right. I do all of this, by the way. There's no script. There's no message boards in front of the camera behind it. I'm going as we're just looking at the charts. You can see how the market is staying over the upper Bollinger Band now 2 weeks in a row. Like all Bollinger Band studies, that means there's only a 3% chance that the market will stay over that going into next week, and after that, 2% chance if it's over that band. When we take a look at the slow stochastics, they have not come out of locking in bullish momentum. So you've got bullish momentum, upside bias since you're over the 18-week average of closes, and you're still riding that upper Bollinger Band. I find nothing bearish on these charts. Same can be said of the NASDAQ weekly chart. Higher lows, higher highs. Here you're again riding that upper Bollinger Band. You closed over it this week as well. Same type of game. You got time where you can back off here. Look at the Dow. It's the same thing. All of the stock indices, this is the president's rally. Remember, when it corrects, it'll be the president's break. It goes both ways. You can't own the rally and not own the break. The Russell's a whole different looking chart. The Russell's got the pattern of higher lows, but the market is also more or less staying within a trading range. It is just embedded, and it's now trying to say, okay, I'm ready to move out to the upside. Can I? We'll see. It's certainly not looking like this chart. It's certainly not looking like those charts, and I think you can see that. Could it join the parade? Absolutely. In the VIX on the weekly chart, the market got up and over the 18-week average of close. It's been over the 18-week average. Got over the upper Bollinger Band is what I meant to say. It got to the 100-week average and bang, right by the end of the week, back into the Bollinger Band. Often when you do this, you get back to the 18-day average. If you get the funding, and if the markets takes off on Monday, don't be surprised to see the VIX get down to that 18-week average of closes. In the 10-year notes, this market is racing ahead, and I want to use that word very carefully and mean what I'm saying. It is racing ahead to plug in the next Fed rate hike. It's coming. This market will be ahead of that hike, and maybe it's going to price in another one by June. But this is the continuation of a monster decline as the market's going there. The dollar index got itself and closed literally under the lower Bollinger Band by about 12 points, so I wouldn't be surprised to see a little bounce. But you're in a big downtrend, and here's the interesting part. The dollar's in a big downtrend. Interest rate futures are in a big downtrend. And the market's not responding to the point where higher interest rates out of the U.S. give the dollar a bid. It's because of where you're at in the business cycle. Sooner or later, and it's sooner rather than later, the market will feel the pressure of higher interest rates, and that market is already saying that won't be as good as you can think for the U.S. economy, where the opposite is true in the eurocurrency, which is getting a little ahead of itself. This week we have coming up, the Bank of England's monetary policy. No one's expecting the bank to do anything until the fall. They could surprise, but that's what's the expectation. And in the eurocurrency, the market expectation now is that the European Central Bank will end by September the QE program and begin a tightening program at that point. I saw that something like 90% of 70 analysts that were surveyed are of that opinion. So you can see where the market's starting to build in and pushing out of this sideways action. So is there more room? There is if this market is inclined to rally. A market I'd be a bit nervous about is a straight-up rally like this in the Aussie dollar. Little nerve-wracking now. The market probably ran, well, you can see it ran into the upper Bollinger Band. Probably ready for a bit of a correction through here. It's already had the good news out of China. It's built in all the good news in Australia. It needs no more than to just get a correction at this point in time. Markets that go up straight like this has done since November, they have a tendency to fall back sooner or later. In the Canadian dollar, NAFTA talks are what's moving this market and the peso, and they've both moved rather dramatically back to the upside. This market, the Canadian, has had the benefit of higher energy prices. It has had certainly good information out of Canada in terms of the employment. It's adding rigs like there's no tomorrow. It's got problems with its pipelines getting the oil where it has to, and it uses an awful lot of rail to move around oil, which is not the cheapest way to move it. But in any case, you still have the higher lows, higher highs. If the market breaks supports back at the 79.25 level, I'm surprised it hasn't been able to rally to the upper Bollinger Band, which is giving me an idea that maybe the market's a little ahead of itself. In the Japanese yen, the big question traders are asking, is this going to turn into a base where the yen starts advancing against the dollar because the Bank of Japan is slowly going to change its monetary policy, one that's been around for decades, of being ultra loose now to the gradual tightening. And you're now coming into key resistance of the upper Bollinger Band and the 100-day average. Momentum is still up and the trend is still up. Bitcoin, cash market, daily bar chart. And this is, I go way back on it. I can get this data now since it's begun. And I can't give you a close. I can give you when I brought in the data. That's all that I can do because this market really doesn't close. It stays open 24 hours a day. But the pattern is crystal clear. Lower highs, lower lows. So this market's under pressure. 92.31 was that low. We'll see if the market, if it's able to do anything from here. All you can do on this chart is negate the downtrend. Let's assume it goes back up over 11,881. You could end up with higher lows, higher highs, but you're still under the 18-day moving average of closes. So I'm still looking to see what this market wants to do, but I don't see it as being that good. On the weekly close of Brent versus WTI, one of the things that I've been telling you on the daily charts during the week is it's not just about that oil prices have advanced, but now it's gotten to the point where Brent got too far ahead of WTI, and you even see it on the weekly chart when you got up here, and now you're in the corrective zone. $6.5, $7 was just an awful lot of money, and that's where you were. You were right in that range. Now you're back to the 538 level. When you take a look at Brent on a weekly basis, you've gotten up to your upper Bollinger Bands and you're starting to stall out. Doesn't mean the trend is over. You still have the momentum locked in bullish. You still have the pattern of higher lows and higher highs. So getting up to the resistance and getting a correction doesn't mean the trend is changing. WTI is the identical position. Higher lows, higher highs, starting to correct. Natural gas went from the Bollinger Band bottom, this week hit the Bollinger Band top, and the market's pulling back. It's a wild trading affair more than it is a trend. They are adding more natural gas rigs. They did that this week. So you put it all together, a pretty crazy week in the markets, but that's what we thrive on. The volatility is what a futures trader wants. And off that volatility, our staff here at Linn Associates, we write a lot. We have our own staff of writers, more than you can imagine, contributing to articles on all these different markets throughout the day. They're delivered into your mailbox. If you get our QT trading platform, or even on my other platform, you can get into all this news, and it's all part and parcel of what we provide our clientele. You not being a client on the whole probably don't see this, and if you haven't seen it, we'd like you to take a free trial run. It's that simple. All you need to do is go to our website, and what you're going to do is you can either call us, you can go here to our site, you'll see our, when you get onto the main page, you'll be able to see a page that offers you a swipe on it. You can see all the different offerings we have. You can click up here if you're watching me on YouTube, and on many websites underneath it says, click here for Ira's free information. With that, you have yourselves a great weekend. As I said, I'll be working on the webinar, and I'll have more information for you during the week as to when the first one's going to happen. I haven't done them in about a year, and then I'm going to get back to writing a little bit on gold as well. You have a great day. I'm Ira Epstein.